Taiwan's stock market just hit its year-end target in February. The analysts who spent December writing their 2026 outlooks, the ones who said the TAIEX might, in the best case, touch 40,000 points by December, they were right about the number. They were just off on the timing by about 10 months. 5 straight record closes. TSMC crossed the 2,000 new Taiwan dollars, roughly $63 per share, for the first time ever, and Wall Street just gave the whole thing a name for it. Goldman Sachs is calling it the HALO, H-A-L-O trade. Heavy assets, low obsolescence. The idea that in a world where artificial intelligence is eating software companies alive, the things you can't replace with an algorithm are suddenly the most valuable things on Earth. Taiwan didn't design itself to win this trade, it just couldn't become anything else at this point. And today we're going to extrapolate all of that. Hi, you're listening to Beyond the Reefs, a show produced by Radio Taiwan International. Here we talk about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.
Taiwan's government confirmed it is standing by its trade deal with the U.S. after the U.S. Supreme Court made the landmark decision to strike down U.S. President Donald Trump's sweeping tariffs. That's according to the country's vice premier, who led the negotiations.
我要在此向国人报告，政府的核心目标不变，也就是
Under the deal, the U.S. agreed to lower Taiwan's tariffs to 15% with no stacking. And Taiwan committed to over $500 billion in U.S.-based investments, purchases, and loans. Despite the court ruling, Zhen says the direction of U.S. tariff policies will continue. Trump has already issued new global 15% tariffs under new legal authority. He later warned countries against backing away from recently negotiated trade deals, threatening to hit them with higher duties under different trade laws. Meanwhile, some lawmakers in Taiwan's opposition parties are calling to renegotiate the Taiwan-U.S. trade deal, or at least delay the review in the legislature.
不重启谈判，面对15号的叠加，
Lawmakers have just returned to work after the Lunar New Year holiday, with the government pushing for the trade deal to be approved. Whether the agreement gets passed, given the changes in U.S. trade policy, is now a question for Taiwan's lawmakers.
Taiwan's stock market rallied to another record high on Wednesday. The benchmark index, the TAIEX, climbed past the 35,000 mark and closed up 2%. Strong performance by TSMC, fueled by the AI boom, along with gains in other tech stocks, drove the surge. The chipmaker's share price also hit a new high, with its market cap now topping $2 trillion.
Let's start with the numbers because they deserve a moment here. The TAIEX came back from the 9-day Lunar New Year holiday on February 23rd and basically didn't stop. 5 consecutive record closes. By Wednesday, the 25th, it had climbed another 3,000 points in 5 sessions. Turnover hit 982 billion new Taiwan dollars, that's about $31.4 billion in a single day. Also a record. Foreign institutional investors bought a net of 62.7 new Taiwan dollars of share on Tuesday alone, and one of the 4th largest single-day foreign buying sessions in Taiwan's history. TSMC crossed 2,000 new Taiwan dollars per share. The total market cap of all listed companies is now about $3.6 trillion in Taiwan, the kind of number that makes other markets look over their shoulder. So what's going on? Well, Goldman Sachs named it HALO, Heavy Assets, Low Obsolescence. Here's the idea. For the past few years, the market loved companies that were light and nimble, or flexible, software businesses, low capital, high margins, easy to scale. You didn't need a factory, you needed a laptop and a good Wi-Fi connection. Then AI arrived, and investors started asking a rather uncomfortable question. If a language model can do what your software does, what exactly are you selling? So the light asset software economy started to crack, and the money rotated somewhere else, into things you can't replicate with an algorithm, like aerospace, automotive, food, semiconductors, physical things. Here's how that looks in numbers. The PHLX Semiconductor Index, That's the global benchmark for chip stocks, is up nearly 16% year to date. The S&P 500 is up less than 1%. The Nasdaq is actually down 1.6%, and the two best performing major markets in the world right now, Korea up 35% and Taiwan up 18%. Now, take that in for a bit. The two markets beating America's biggest indices are both hardware-heavy, export-driven, chip-making economies in East Asia. That's not a coincidence. That's a structural rotation playing out in real time. And the world is repricing what a hardware economy is worth. Taiwan, sort of by accident, is sitting at the center of it. Here's where it gets interesting because Taiwan's position in the rotation isn't just lucky timing. It's the product of constraints that for years looked like a problem. Taiwan can't become a software economy. Not really. The land isn't there. We've covered this before. The physical space to keep expanding domestically doesn't seem to exist. The labor isn't there either. Retirements are now outpacing births. The demographic inversion is getting worse, not better, and the decades of accumulated manufacturing knowledge, the capital investment, the process expertise, all of it points in one direction. Hardware, physical things, the layer of the technology stack you can actually touch. Goldman Sachs' Halo basket includes aerospace, automotive, food, and semiconductors. And what do these industries have in common? The core value is locked up in physical processes that took decades to build, and that you absolutely cannot spin up in a data center over a long weekend. TSMC is the purest example of this. You can't outsource a fab. I mean, you can build one, but you can't train a model to do what TSMC does. The company makes semiconductors at process nodes so advanced that no other facility on Earth can match them at scale. And that's why roughly 85% of the world's most advanced chips come from a single island. The constraint is also the moat. And it's not just chips. Morgan Stanley noted this week that global industrial output grew 2.4% last year, doubled its 3-year average. Traditional industries, the ones everyone wrote off as legacy a decade ago, are recovering because it turns out that AI need actual things. Like data centers need power needs transmission equipment needs copper and steel and precision engineering. Every layer of the AI economy eventually touches something physical, and somewhere in that physical layer, Taiwan is almost certainly involved. Not because Taiwan planned it that way, but because you can't run the AI economy on software alone, and Taiwan happens to make a lot of the hardware that it runs on. The Halo trade didn't choose Taiwan. It found Taiwan because Taiwan couldn't have been anything else, really. Now, here's the counterexample, and it's a good one. NVIDIA reported earnings this week. Revenue up 73% year over year. Profit nearly doubled from $22.1 billion to $43 billion. Next quarter's revenue forecast is $78 billion. Against a market estimate of 72.6. By almost any measure, the most exciting quarterly earnings in the history of the technology industry. The stock moved 0.23% after hours. Let that sit for a second. The company that essentially built the AI economy from scratch, the one that makes the chips every AI model in the world runs on, just posted numbers that should have broken the internet, and the market basically shrugged and said, either I can't put any more money into this, or that we'll wait and see. So what does a shrug like that mean? It means the market has already priced it in. It means the obvious winners of the AI story have been bid up so high that even blowout earnings can't move the needle anymore. And it means the next round of gains is flowing somewhere else. Where? Well, most likely down the supply chain. Delta Electronics, a Taiwan-based power management company, gained more than 6% on Tuesday alone, not because of its own AI chips, but because U.S. investors raised its price target, citing demand for AI server cooling and power supply systems. Remember, not AI, the power supply of AI, the infrastructure underneath the infrastructure. That's the halo, the HALO rotation in its most literal form. Not a bet on who wins the AI race, a bet on who builds the track. And increasingly, building the track runs through Taiwan. Which sounds like good news, and it mostly is, but here's something underneath the headline numbers worth looking at a little bit more carefully. It's a little uncomfortable. In January, right after the TAIEX crossed 30,000 points for the first time, a legislator stood up in the Finance Committee of the Legislative Yuan and asked, essentially, wait a minute. He pointed out that TSMC, which makes up more than 40% of total market cap, had driven most of the gains, and that on the very day the index hit its historic high, 64% of all listed companies were still trading below their yearly average. His line was, the market has lost its balance. Many investors who don't hold TSMC cannot share in the benefits. And that's a polite way of saying this is increasingly a one-stock index. One company index. When TSMC drops, the whole TAIEX drops, even if 1,200 other stocks are going up. When TSMC surges, the index looks like a rocket, even if most of the market is sitting still. On the first trading day back from the Lunar New Year holiday, TSMC fell less than 1% from its intraday high, and the single move cost the TAIEX about 280 points. Electronics now make up nearly 80% of the market turnover. Old economy stocks like plastics, textiles, traditional manufacturing get a bit of rotational buying when funds flow out of big caps, but it's overflow, not recovery. And you can see the same split in the job data. Overall unemployment just hit a 26-year January low. That's genuinely good, but youth unemployment is 11.4%, and here's the part that raises eyebrows, certainly mine. University graduates have the highest unemployment rate of any education tier. The most qualified workers are the hardest to place. That's a structural mismatch, and it's been building for a while. So the rally is real. Taiwan's hardware economy is genuinely strong, but the strength is concentrated, and the concentration is getting tighter, not looser. Now, here's a story that didn't get much attention alongside that market records, and I think it should have. On February 20th, the U.S. Supreme Court struck down Trump's reciprocal tariffs, the one built on IEEPA, the International Emergency Economic Powers Act, 6-3, immediately effective. Gone are the tariffs. Trump's response? Pivot to Section 122 of the 1974 Trade Act, which lets the president impose tariffs up to 15% on all countries at once for up to 150 days. He went straight to the maximum, 15% global, and likely going to extend that term to 150 days. Taiwan's current effective tariff rate is around 8.6%, among the lowest in the world. So I guess their deal with the U.S. worked, right? Well, here's the problem. The trade deal Taiwan signed earlier this year was built on the IEEPA authority, the exact authority the court just invalidated. And the 2,000 plus products specified exemptions Taiwan negotiated, those were country-specific carve-outs. Section 122 doesn't allow country-specific carve-outs. It's a blanket rate. Same for everyone. Taiwan got the bill, and the discount is disappearing. Taiwan committed a total of $500 billion to the U.S., or at least promised to. They got the bill, still need to pay it, but their discount from that deal is disappearing because there is now a new tariff on the table. And here's the irony that's rather difficult to ignore. The countries that moved fastest to sign a deal with the U.S., like Taiwan, Japan, Korea, the EU, gave up real things. Taiwan committed $500 billion in U.S. directed investment. Japan committed $550 billion. South Korea, $350 billion. These commitments are locked in. Japan confirmed immediately after the ruling that its pledges stand. Korea said it's staying for security reasons, regardless of the tariff outcome. Meanwhile, the countries that didn't sign anything, like China, Brazil, India, saw their effective tariff rates drop after the ruling. China went from 36% down to 21%. Brazil dropped to 6.8%, India to 8.2%, roughly the same neighborhood as Taiwan. Countries that signed deals are roughly where the countries that didn't sign ended up, just with significantly more obligations promised and attached. So here's where it gets really uncomfortable. The Supreme Court removed one tool from Trump's tariff toolkit, but it didn't remove Section 301, and Section 301 is arguably the one that matters most to Taiwan. Quick breakdown. Section 122, the one Trump just used, applies to all countries equally, caps at 15%, and expires after 150 days. We covered that. Section 232 targets specific industries like steel or semiconductors, but requires a formal government investigation first. That takes months. Neither of those is especially surgical. Section 301 is different. It targets specific countries for specific trade practices. No expiry clock either. No balance of payment requirement. And it can be applied at very high rates, by country, by sector, without the same procedural delays. If the U.S. decided to use Section 301 against Taiwan's semiconductor industry specifically, and the legal architecture for that exists, Taiwan would have limited room to push back. Because the thing that makes Taiwan indispensable to the global economy is also, from a certain angle, the thing that makes it a target. You can't threaten to move your customers away from TSMC when TSMC makes 85% of the world's most advanced chips. There's no credible walkaway. The IEEPA ruling didn't make Taiwan safer. It changed the shape of the risk. The most dangerous tool in the box wasn't the one the court removed. So let's end somewhere quieter. This week, the Port of Kaohsiung signed a sister port agreement with the Port of Subic Bay in the Philippines. Port operations, digital systems, security cooperation, personnel exchanges. Now, the Port of Kaohsiung did about $750 million in operating revenue last year. International cruises called about 37%. It's a growing port, and it's growing southward. This will not move the TAIEX. Nobody is writing headlines about it compared to TSMC crossing the 2,000 new Taiwan dollars mark, per shares mark. A port cooperation agreement with the Philippines is small potatoes, but it's structural. Taiwan's new southbound policy, which has been going on for years, the longest running push to deepen economic ties with Southeast Asia, is quietly building relationships and physical infrastructure that don't depend on any particular U.S. administration's trade policy, don't run through the U.S.-China dynamic, and don't live or die with any single Supreme Court ruling. So a port agreement with Subic Bay is one node in a network. One node doesn't make much, but you build networks one node at a time. And a network of port agreements, trade relationships, and supply chain connections across Southeast Asia is the kind of diversifications that doesn't show up in the TAIEX but compounds over decades. The stock market is the short game. It's real and it matters, and right now it's flashing green. The port is the long game, and the halo trade, whatever it looks like in 5 years, can't do all the work by itself. Taiwan's market just told the world something, that in a rotation away from software and towards physical things, toward the hardware the AI economy actually runs on, Taiwan is sort of exactly what investors are looking for right now. Whether that's a permanent position or a favorable moment, that's the open question. The year-end target arrived in February, and the tariff exemptions are dissolving. The tool most dangerous to Taiwan's semiconductor industry wasn't the one the U.S. court removed, and the port in Kaohsiung just quietly signed a deal with the Philippines. Do you see where I'm going with this episode? Or maybe this is what winning looks like. Maybe winning and being indispensable aren't quite the same thing, but Taiwan is definitely looking for alternative paths. Thank you for listening to the show. I'm Joey Chow. Tune in next week to find out about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.